Starting out with a flashback, just to prove we have our feet on the ground. This was posted on February 17th, and it reads, on April 2nd, the U.S. will implement tariffs. This will be the depth of the downside in altcoin markets, and when we'll deploy our cash from our December 20th sale. And it's that sale that was made on December 20th that mirrors the exact setup that we're looking at right now. As you can see, February 17th, fairly accurate insight. This is why the majority of Moonboy content creators who are uploading under the keyword Caspa have jumped ship, because they recognize there's a lot more than buy and pray for 100x in this game. The issue at hand directly mirrors that December 20th sale, where inside VIP, we are advising members, sell 50% of your portfolio, particularly your riskier altcoins, in preparation of the massive market dump that will end in April. The setup on December 20th is happening again right now. Before we explain the setup today and all the individual details, let's flash back to December 20th, because it's the exact same event reoccurring. And to highlight how important it is, Powell just came out, made an address to the nation from Washington, D.C., 10 minutes after the PPI data, which is covering inflation, saying the central bank's getting ready to change their game plan and they're going to start making some dramatic moves. The big issue in December was the Fed had a quarterly economic update. They're having another one on June 18th. This is when they tell everybody how many rate cuts they're planning on doing this year. In December, they said, we're going to do 4. And then the meeting came up and they said, we're only going to do 2. Plus, the Bank of Japan had set in stone a carry trade, exactly like August 1st. And you would think, oh, everybody knows the Bank of Japan, plus the reducing rates is going to cause massive downside in crypto, and they would get ready. But they didn't. There was a relief or a sucker rally as the altcoin market rose up, directly marching into their own doom. The reason why this quarterly report is so filled with doom was the tone Powell took at his meeting in Washington, D.C. Jumping over to this news clip from Binance, covering Washington's meeting, it says, everybody was hoping for some dovish sentiment, but that's not what they got. Markets are going to be trading flat to down as they wait for a clear boost from Fed policy easing. There's 2 parts to every bull run. Rates is an important part, but it's not necessary. A bull run can still take place in a high interest rate environment as long as there's excessive quantitative easing. And now's when we get into the Batman and Robin scenario. The Fed, being the more powerful Batman character, did not step up and fuel the economy out of this recent downside. It was the Treasury General account, half as powerful as the Fed, half the buying power, that were dumping their liquidity into the economy, thus risk on markets, reaching the bottom of their bank fold on April 9th. We can see that's exactly when the altcoin market cap and stocks reached a low point. Right now, the Treasury General account is looking for a refuel, looking to get more cash. In mid-June, the Treasury General will be getting a massive injection from small businesses and self-employment taxes alongside tariffs themselves. So this is a double-edged sword. While they're playing chicken with the Fed and inflation, Scott Bessant is getting an excess amount of cash so he can supersede the central bank and stimulate the United States economy without their assistance. We will be tracking the Treasury General account in detail inside VIP, letting members know when they're refueling their money and when they're ready to start distributing that liquidity. What this boils down to is risk-off sentiment coming in the 1st to 2nd week of June, right before that quarterly economic report. There's still an opportunity for a relief or a sucker's rally to help get institutional investors out, Looking at the total 3 chart as well as virtuals, which has been extremely active, we can see that's the PCE data. It's risk-off behavior until that information touches down. At 5:30 a.m., our group is up. We're reading over the PCE summary report. We've got trades ready to go on bullish news. Once we establish sentiment, we're launching to the upside. Here, it's the FOMC meeting. And notice the same risk-off behavior, changing direction and then ripping to the upside. With this massive quarterly economic report coming up, this risk-off behavior that we see before important information is going to be amplified, essentially giving traders an opportunity to buy at a lower price. In the event Powell comes out and he says 0 interest rates, it's cool because you already sold at the top of the relief or sucker rally inbound over the next few weeks, protecting your assets in this highly volatile environment. In order to comprehend and apply central banks to your cryptocurrency trading, it takes an immense amount of work. That's why nobody else on the internet was able to put together a prediction as accurate as this, waiting until April to deploy the cash that we sold off in December 20th. That's broad stroke big picture. Back to the virtuals chart at a briefer time frame window, that's 5:30 a.m. directly. The market's selling off in a risk-off behavior until group members' cell phones go off. They got their PCE data and they realize it's bullish. Suddenly the market's changing direction right at 5:30 a.m. And we're getting ready for a much more elaborate risk-off setup in this quarterly economic update. This VIP group, utilizing central bank monetary policy, gets a massive edge over any other trader who's not focusing on central bank monetary policy. This goes as deep as classic patterns, connecting to central bank monetary policy. As we can see on the total 3, falling wedge breaks to the upside on rate cuts. Falling wedge breaks to the upside on the Treasury General account, starting quantitative easing. We'll also leave a link to the Treasury General account day by day, dollar by dollar records, so you can track at home when the next bump up in quantitative easing will take place. Thanks for checking out this video, guys. We'll catch you on the next.